Hello everyone, I'm Kingsley Karmaratnam. You all are welcome to Accounting Modeling, Real World Accounting or Practical World of Accounting. I think you have already studied financial accounting, management accounting, and some basic aspects of financial management for your other courses. Compared to those courses, accounting modeling is quite different. Why? Because in this accounting modeling, we are going to discuss and you are going to get hands-on experience on real life accounting issues. We are going to discuss business cases and how accounting modeling can be applied to support management decisions and generating user friendly information to support management decision making. So accordingly, I hope you all will enjoy this subject because it is totally 100% practical. And as far as the assessment method is concerned, there are no paper based exams at all. You'll be assessed based on practical issues and you'll be given some cases, business cases, and you have to work with computer machines and provide innovative solutions, and hope you will enjoy it and you will really enjoy these subjects. As far as the prerequisites are concerned, it is you are expected to have fair understanding about financial accounting, management accounting, and some idea about basic concepts of financial management. It is not a must, but if you have fair understanding about of all those basic subjects, it would be very helpful for you to discuss the concept we are going to discuss in this accounting modeling. So we'll start our discussion accordingly. If you look at the session outline, we are going to discuss at the beginning what is accounting and what is the prime objective of accounting and accounting information system, ERP systems, and uh, what is accounting modeling after all, and what are the limitations and the advantages of accounting modeling. Right, thereafter we'll discuss, I'll let you to have a look at some examples of accounting modeling so that you can have an understanding what kind of things you are going to do or you are going to tackle in this particular accounting modeling course. Okay, let's refresh your understanding about financial accounting, management accounting, and financial management. I hope you all have studied about those subjects. It is not a must to have those thorough knowledge about those aspects, but it would be very helpful for you to grab the basic concept with accounting modeling if you have some fair understanding about financial accounting and management accounting and financial management. Don't worry, even if you have not thorough understanding about all these concepts, all these subjects, still I think you can manage if you carefully engage with this discussion. Okay, what is accounting? So we can define accounting as a process of identifying, measuring, and communicating of economic information to permit informed judgment to the users. So according to accounting mainly concerns about identify or gather information and we measure them in a manner that can be easily used by the decision makers for their decision making process. So according accounting mainly concerned about identifying, measuring or processing and communicating of economic information or more reliable relevant information to the users to facilitate in making rational or economic judgment. Okay, then we can accordingly see accounting as an information system, because in an information system you have three uh, key components. You have inputs, you have process and output. Now, as far as accounting system is concerned, there also you can see there are three key parts. You have inputs, there's a process and output. So we can see accounting system consists of three main components of an information system. So as far as input is concerned, we have transactions and events. So we have um, raw data. So we put raw data to the accounting system to be processed into more meaningful information. And as far as process is concerned, as far as financial accounting is concerned, we have transaction and events as inputs, and we have a process. It is called, we identify transaction, we record them in the day books or journals, then we classify them in ledger accounts, then we summarize them in the form of financial statement, and we interpret them through financial statement analysis and ratio analysis, and we provide user friendly, more relevant process analyze data for the decision makers. So accordingly, accounting can be considered that, or accounting system can be considered as an information system. So we can define accounting information system as a system of collection, storage and processing of financial and accounting data that is used by decision makers. So accounting is accordingly can be viewed as an information system because it consists of three key components of an information system. It gathers data, process data into meaningful information and communicated them to the relevant parties to support decision making. Now when it comes to our subject, now we are going to discuss accounting modeling. Now accounting models, where do they stand, right? Now if you look at the broader picture in a big companies like multinational companies or well established mass scale business organization, they have very big or integrated information system. They are called enterprise resource planning system. So enterprise resource planning system is a very vast and integrated and very sophisticated information systems. They are very expensive. For example, we can say SAP is very popular in Sri Lanka, and PeopleSoft of Oracles. So this ERP system, they integrate all the functions of an organization. You have production functions, HR functions, marketing functions, accounting and finance function, IT functions, all these departments and all these divisions, all these functions are integrated through one particular information system, one particular integrated information system. It is called enterprise resource planning system. So accordingly, when the marketing team plans to achieve a particular market sales target, right, that marketing plans automatically link with the production planning or production department. So when marketing team alter the marketing plans, it automatically alters the production plans, and when production departments alter their production plans, it affect the purchasing departments, raw material purchase and the other related divisions. When production team plans to produce or achieve production targets, it automatically link with the HR department. So if the production teams or marketing teams need employees to be recruited, it will be communicated and updated to the HR departments. If the marketing people are going to expand their advertising budgets, production people are going to expand their production targets, it will automatically link with the accounting division, so accounting function. So this kind of all functions are integrated in enterprise resource planning system. So we are not going to talk about that enterprise resource planning system. So account information system usually found inside enterprise resource system or enterprise resource planning system. Sometimes in a small scale business organization, sometimes they may not have a sophisticated or expensive enterprise resource planning system. Instead, they may have separate accounting information system. For example, company may have on average company may have let's say Sage accounting information system, or accounting system like DAC Easy or QuickBooks or Myobi or ACPAX. So these are accounting information system or accounting processing systems. So accounting information system is not that much sophisticated as ERP systems, but accounting information system again not that much expensive, but to certain extent accounting information systems also expensive. So we are not going to talk about accounting information systems in accounting modeling. Accounting modeling is can be seen inside the accounting information system. So what is accounting modeling is according. With accounting modeling, we are going to develop some models by using let's say for example, we are going to discuss accounting modeling with Microsoft Excel spreadsheets. So by using this open source Excel spreadsheet, we are going to develop some models so that you can easily process some data into meaningful information. So these models are going to be used to address a particular accounting information need. So it is not that sophisticated as accounting information system, and it is not that sophisticated at all as far as ERP system is concerned. Accounting models are the models we develop to achieve a specific information need, right? So we'll keep that in mind. So that is accordingly our scope. So we are going to apply Microsoft Excel spreadsheet to develop some models to achieve a particular information need. Okay, so accordingly we can define accounting modeling as a process of structuralizing and programming of various accounting tasks in an organization in order to manipulate them to provide various information for decision makers. Now, for example, if a company wants to prepare a profit forecast, and profit forecast is a function of forecasted demand, forecasted cost of sale, forecasted operating expenses. Now if you have all these forecasted data, or if you have all this forecast raw data, you can develop a model so that you can easily predict or forecast your future expected profits. So we can simply develop a model by using these sales demand forecast, and by using the cost of sale forecast, by using the operating expenses forecast, we can develop a model to compute your future forecast, future profit forecast. So accordingly, we will now look at simple examples. Again, we'll come back to this example later. Now, for example, you can see here I have developed a model to compute depreciation. Here, if you want to if you want to manipulate this figure, here you can see cost of asset is 14 million and the estimated scrap value is 2 million and useful life is, let's say whatever the useful life, let's say it is 3 years or 4 years. You can see you can change this useful life, and as and when you change your useful life, our model automatically compute depreciation for the period. So it's very convenient. So this is what we call manipulate. So we have developed a model, and if you want to change, let's say if you want to change the cost of the assets to 1 million, let's say 10 million, you can alter these figures, and estimated scrap value, let's say it is 4 million, is automatically alter. You can see, I think it's quickly in millisecond is process, right? You can see depreciation is quickly computed, right? This is what we call accounting model. We have input, this is the input area, these are the data. We have only 3 data: cost of the asset, scrap value and useful life. Using this raw data, we need to compute depreciation. Now this model compute you to your depreciation. So this depreciation can be utilized, this information can be utilized for you to make decisions or for you to prepare other statement or other reports, right? So this is a simple model, right? So accordingly, this very interesting subject, interesting practical subjects, you can provide more practical solutions with your accounting basic knowledge, right? Well, right. So we'll move back to our discussion. Okay, now as I mentioned earlier, in an accounting model also we have 3 key components. We have inputs, we have a process and output. Now as far as input is concerned, you have different input. For example, operational variable, for it may be sometime cost of sales, it may be sales, it may be interest rate. So these are the inputs, and sometimes management policies may be considered as input to our management policies might be converted into quantified data, and it will be incorporated or combined with our model, so that it will be considered as input to our accounting model. And external variables, for example, the outside external environment, let's say government tax or the government any rules and regulations imposed. So those information, those data will be considered as input to our accounting model, and accordingly accounting model has input, and those input in this example we have 3 inputs here. 3 inputs, you can see we have 3 inputs here: cost of sale, cost of the assets, expected scrap value of the asset, and useful life. So these are the inputs, right? So this useful life will be decided by the management. It is not the economic life, and you know, right, what is meant by depreciation. Depreciation is a systematic allocation of depreciable amount of an asset over the useful life, not the economic life. Economic life is different. Useful life is determined by the management. If the management wishes to use a particular vehicle in their business organization for 5 years, that is the useful life of the asset. Useful life of the asset is 5 years, but still the vehicle may have economic life more than 10 years. So useful life of 10 years is a management policy decision. Management decision is to use the asset for 5 years. Now we put it is 5 years like this. So it's an input. So whenever you put 5 years, our model automatically adjusts and compute depreciation like this. If the management decided, let's say, economic life, useful life to 2 years, we just put 2 years and our model will compute depreciation for 2 years. See, with the management policy decision is, let's say, to use the asset for 6 years, we just put 6 years and enter, it compute depreciation very quickly, like this. So you can see this is what you call manipulation. Once you develop your model, it is not it's very convenient for you to manipulate means you change, you can alter the inputs. What if cost of, say, asset value is reduced to 8 million, right? You can see system all right, model quickly change. What if scrap value is going to be reduced from 4 million to 2 million? It quickly compute, right? So you can easily manipulate, right? And you can see here I have to show you, I have added here scroll bar, right? So we will discuss how these techniques are going to be familiar, right? How we are going to tackle this kind of model, how we are going to improve this kind of model by using some important supportive tools available in the Excel spreadsheets. For example, here you can see I have combined scroll bar button to this particular cell, so I can easily change this. No need to type V1, right? Easily change, right? Very simple. Okay, right? So according this what you call accounting modeling, right? Simply, right? Don't think this is the accounting model, right? This is one of the example for accounting modeling, right? And there are no boundaries for accounting modeling, right? If you are creative, you can develop by using spreadsheet or the Excel functions, inbuilt function, and you are using your creative knowledge, creativity, you can develop very attractive, very useful accounting models to satisfy your information need. All right. So don't think we started discussing how to develop accounting models, right? We will start from the very beginning and we'll gradually discuss step by step how to develop an accounting model later. This is just for your understanding what is all about accounting modeling. So today I'm going to discuss introduction part, right? Don't think I have already quickly prepared the accounting model, right? No, I will explain all from the very beginning by step, right? This is just for an example. You can easily see what is meant by accounting model, right? This is what we are going to do with accounting model more or less, right? Okay, then process. So input, you can see in our previous example, in that particular model we had only 3 inputs: cost of the asset, scrap value, and useful life. And process, so models built in blocks of equations. Now actually if you go to the manufacturing plant, there's a production process which is visible. You can see people are moving here and there, you can see the raw materials are converting into physical tangible outputs, and you can see there's a physical process is there. But in this accounting model, there's a process, but you can't see the process. You can see here this is your output. If I put all this output in let's say I'll put in them in yellow color. So yellow color area represent the input. So only very few inputs are there, and all this don't think this is a process, right? This is your This is your output. This is your output. So where is the process? Where's the process? Is process missing? Right? Process is inbuilt inside the formulas. Actually, I have developed lot of formulas here, right? That's how, and that's why these figures or the informations are coming quickly. So you can see here, right? You can see this 800,000. How this 8 million comes? I have developed some different kind of formula in a particular manner, right? And you, and there are some alternative ways of getting these figures, right? Don't think this is the only method of getting this 8 million to this particular cell. For example, if you want to get 8 million to this particular cell, you can just link this cell to this particular cell and just enter. You can see still 8 million is there, but in my model, right, you can see if you link this cell to 8 million, it is just reference to b1 cell, but I had a little bit sophisticated formula. You can see I had applied using if function. I had taken 8 million to this particular cell. There's a particular reason. I'm not going to explain that now, right? So according, you can see, oh, this is the process, right? This is the interesting thing, right? This is the process. So process is inside the spreadsheet formula, right? There are some inbuilt formula and there are some formulas you can create by yourself. So here I used my own formula to get this particular figure. So accordingly, process for every figure you can see here in this address bar, right? You can see formula is appearing. So every figure there's a formula, right? At least there's a reference number or there's a formula, right? You can see formulas. Every place I have written formulas, right? And don't think this is the only way, right? Sometimes you, right, once you study the accounting modeling, you will be able to create an accounting model even for the same this scenario, more, right? A very advanced model which is more creative than my one, because creativity is different from person to person, right? If you are very creative, if you are very interesting about this subject, you can develop very attractive, very advanced models that will provide more convenient, more reliable information to satisfy the information need of the users. Okay, so accordingly, this is the accounting, this is the process. So process is inside the accounting formula. So what I have highlighted in yellow color is the input area, and what is appeared in this green colored area is your output. That is your requirement, that is your needed information, and according input and output can be seen, but process cannot be seen, right? Because process is inside the formulas applied in this model. Okay, understood? Right, then output. Okay, now output of this particular of any accounting model may be in the forms of reports, in the form of graphs, in the form of tables, in the forms of highlights figures, right? For example, we can, right, we'll discuss later, we can apply different formatting applications, and you can easily monitor some figures which are above or below the required figures. For example, if this value is greater than 500 or less than 5 million, we can highlight it through Excel formatting, right? So accordingly, we can creatively prepare our accounting model to provide more attractive, more supportive information to the information users, right? Okay, now when it comes to develop an accounting model, it is very important to ensure that accounting model provide the only the required information. You are not going to mess up the accounting model with unnecessary information. You provide only the relevant and required minimum information, then your accounting model can be very smart, very attractive, right? So we are not going to be too much detail about the information that you are going to provide. So you mainly focus on what is the required information, and you are trying to provide the minimum required information very attractive manner. And the flexibility, now flexibility means you should be, once the model is developed, you should be able to easily and conveniently manipulate the input area. Now once the input area is easily manipulated, automatically output area is manipulated. That means right, different scenarios are generated under output area, so that it is very convenient. That is what we call flexibility. If you look at our model, you can see it's very convenient for me to alter or manipulate the useful life. It's just a matter of clicking this button, right? Once you when you click this button, it's quickly and easily let you to alter your figures, right? Okay, if you want to estimate, if you want to change the scrap value, because scrap value may be timely basis, we will estimate. Scrap value should be estimated by the management at the end of each accounting period. So the accountant's estimate on scrap value is going to be changed, depreciation will be changed, right? Let's say estimated scrap value has increased from 2 million to 3 million. You alter, system quickly alter, right? Did you notice it change? If you right, look at the, I'm going to change, look at whether the figures are changing. Just quickly change, right? Okay, so this is what we call flexibility. Model is developed. For you to develop the model, you have to consume your time, right? Actually, for me to develop this model, it took about, I think, 30 minutes, right? 30 minutes. So it consumes time. So, but once you develop the model, it's very convenient, right? You are not going to waste your time. Quickly you can manipulate your figures and you can see what is the outcome. Then cost, and actual accounting model aims to minimize your cost, because by way of saving your time and efforts, we are going to save our cost, right? So accordingly, these are some of the key characteristics of accounting models. Mainly, it is very user friendly, it provides required information, and very flexible and very convenient to operate, right? Okay, now as far as the limitations of accounting models are concerned, there are some limitations, right? We need to understand the limitations as well, right? So one limitation is accounting models handle quantifiable data. Yes, you know, in the Excel sheet, we mainly in the input area we provide quantified information, but when it comes to make decisions or process information, sometimes there are some qualitative information that may not be that convenient for you to quantify, right? So accordingly, qualitative informations are also important for your decision makings, but our accounting models are mainly using quantified accounting information, right? And model include only selected details. Yes, models include only the selected details. Let's say by the time we develop our accounting model, we have recognized only 5 variables as the variables that are affecting our decision. So accordingly, we accommodate only 5 variables into our input area. But what if we mistakenly omitted one important area? That's another 6 variable is relating to our analysis, but we have accommodated only 5 variables. Say accordingly our accounting model is not reliable because one variable is missing, one variable is not considered, not accommodated. So accordingly the analysis and the result is going to be the reliability and the relevance of the accounting information generated from the model is questionable if you have this kind of limitations, right? So you have to keep in mind, you have to carefully design accordingly. Actually, when it comes to develop accounting model, you need to plan it, right? You need to plan, you need to take some times to think about what is the need of this particular accounting model you are going to prepare, who are the users, what is their information need, right? For what purpose we are going to use this accounting model, right? So accordingly, you need to have very good understanding and planning part before designing before developing accounting model, right? Okay, if you develop and if you plan well carefully, then you can minimize most of these limitations. And technical errors means once the model is developed, it is very unlikely to have errors, but during the development stage, right, there's a possibility you may make some technical errors, right? Because models are developed by humans and humans are subject to making errors, right? So accordingly there's a possibility of making technical errors, right? So these are another limitations of accounting models. But there are some techniques to trace these errors, right? So we'll discuss them later. Okay, well, now we'll have a look at again the examples, right? Two examples. One example I already explained, right? We'll have a look at these two examples as an examples for accounting models, right? We will later discuss how to develop this model. So far I have explained you what is the nature of accounting modeling, just to make you are familiar with accounting model. Sometimes you may have I think you may have some wrong picture about accounting model or accounting model with computers. Is it a difficult thing or is it a difficult task? Is it a tough subject? Actually, this is not. This is a subject, but don't think it's something like the paper-based subject is a theoretical subject, right? This is a more practical, 100%. I mean, the more practical oriented subject. You need to use some theoretical knowledge. For example, if you want to compute depreciation, you should know what is meant by depreciation. You should know what are the methods of computing depreciation. Otherwise, you can't develop the model. But here we are not going to ask you, I am not going to test you what is meant by depreciation, what is meant by accounting modeling, what is meant by what is the definition of accounting modeling. That is not needed, right? You can, that's for your knowledge purpose, you can explore the internet or any other books on accounting modeling and you can be familiar with accounting modeling. But what we are going to do in this subject is to practically apply accounting modeling techniques, tools and applications to develop very attractive accounting models to satisfy information needs of the intended parties, right? So accordingly, we will now have a look at those two accounting models. So these are two accounting models I wanted to show with you. The first model I developed to compute depreciation. So usual how you compute depreciation, right? What is meant by depreciation? You know, depreciation is a systematic allocation of a depreciable amount. Sorry, can you remember? Depreciation is a systematic allocation of a depreciable amount of an asset over can you remember useful life, right? So these are technical definition, but it's not needed at all, right? Just to refresh your knowledge only, I just type this definition in line with LK 16. I hope you have studied, but it's, right, even if you are not familiar, I mean not remember the definition, don't worry, you are not going to be penalized, or you are not going to be punished for that, but it's good if you know this basic concept, right? So this is in line with LK 16, property, plant and equipment accounting standard. Depreciation is defined as depreciation is a systematic allocation of a depreciable amount of an asset over the useful life. So what is the depreciable amount, right? What is depreciable amount? Depreciable amount is the difference between cost and the scrap value, right? And then we have useful life. Useful life is the life that the management is expected to use the asset, right? We have then useful life, right? Okay, so accordingly, for you to come to depreciation, how many inputs are needed? I already show in the previous model, right? We need to have this information: cost of the asset, then we need to have scrap value, then we need to have useful life, right? Let's say cost of the asset, cost of particular asset is let's say 4 million. Okay, scrap value, let's assume scrap value is 1 million and useful life is 5 years. Okay, how to compute depreciation for the year 1? Year 1 depreciation, we can say depreciable amount is equal cost minus scrap value, right? So this amount, or sometimes let's say you may compute like this, equal cost 4 million. This is the very worst case scenario, right? Someone might do it like this: 2 million minus 1 million, right, divided by 5. So this is the annual depreciation. Yes, 2 million divided by 2 million minus 1 million is 3 million. 3 million divided by 5 is annual depreciation is 6 million, right? So accordingly, first year depreciation is 600,000, right? 600,000. So first year depreciation is 600,000. Second year depreciation is 600,000, assuming the straight line method. Third year 600,000, right? So this is the way we are going to compute depreciation, right? Someone might compute depreciation like this, right? But it is not that convenient, because what if you later identified your scrap value is going to be 2 million, right? Then you need to again recompute, because you have changed your scrap value estimation. Management estimation about the scrap value of the asset has been changed. So when this is changed, you need to again compute the next year depreciation, right? So it is time consuming. This is not the way we develop accounting model. Actually, this is not the accounting model at all, right? This is a ordinary way of computing. Actually, this is not even the ordinary way, right? Ordinary way should be at least you should compute depreciation like this, right? Cost of the asset minus scrap value, right? If you want, you can put them within brackets, divided by scrap value. Sorry, useful life. Then you can see depreciation is 400,000. Now if you want to increase, let's say later decrease this scrap value to 1 million due to change in the market conditions and due to some other reason, scrap value has dropped to 1 million. If you enter this formula, automatically compute depreciation. So in a scenario like this, we can develop an accounting model to achieve our information need or achieve our requirement of computing depreciation for each year and the carrying amount of this asset at the end of each reporting date in a very attractive and user friendly manner. So we can, for that purpose, we can develop accounting model like this. Right, so this I have already explained, so I am not going to talk about it again and again. So you can see input area is there, and this is the output area, and here you can see the cost of the asset is appeared, annual depreciation is appeared in the second column, and then accumulated depreciation so far at the reporting date. You can see the accumulated depreciation and the carrying amount. Carrying amount is the difference between cost of the asset and the accumulated depreciation, right? In accounting, there are some other items, other elements to be considered when computing carrying amount, but for the time being, right, for our scenario, carrying amount is the difference between cost of the asset and the accumulated depreciation as at the reporting date. So accordingly, end of each year reporting date, you can see the carrying amount is appeared in this last column. So accordingly, you can see this is the way I conceptualized the need of this accounting information requirement, and I develop accordingly, right? Sometime you might perceive or you might understand this particular information need in a totally different way. So accordingly, you might develop or you might think creatively to develop totally different a model, right? So don't think this is the model that is suitable for depreciation computation, right? This is what I develop, but you might consider more in innovative way of developing a model for computing depreciation, right? Sometimes this particular model may have some limitations, right, or errors that I have not noticed, right? So accordingly, we are going to apply practical cases or practical business cases and to develop models to support management decision making, right? So we'll now consider another example, right? Okay, this is another very good example. I mean, this is relevant for you as well, right? As ordinary people, you know, you all are, right, going to deal with banks, especially getting loans from bank. If you want to get a loan from a bank, you know, if you obtain a bank loan, right, the loan is going to be repaid in the form of, right, by paying loan installment, right? Loan installment, do you know, right, loan installment, how do you compute loan installment? Actually, loan installment calculation is discussed under financial management, right? Loan installment or installment value, once you obtain a bank loan, the amount you are going to pay monthly basis or quarterly basis or annually basis, that installment value is dependent on three variables, right? What is the three variables that determine the loan installment value? Of course, the amount you borrowed from the bank. That means loan amount. If you obtain big loan, then definitely your installment is going to be high, right? And the loan period, repayment period. If you are going to repay the loan in lengthy period, it is to certain extent it is likely that installment value is going to be relatively low. But if you are going to repay the loan in the a very short period of time, then you will have to pay big installment. But it's very likely that you are not going to pay big amount of you are not going to pay interest that much, right? Interest expense will be very low if you are going to settle the loan in the short period. But if you are going to settle the loan in a short period, your installment value will be high, right? So accordingly, that's for your uh, general knowledge, right? So accordingly, loan installment value is depending on these three variables: loan amount, repayment period, and obviously, right, it's obvious that interest rate. So these are the only three variables that determine your loan installment. Let's say you got 6 million bank loan for 10-year period at a rate of 10% interest, right? Nowadays actually bank interest rate is less than 10%. If you are going to get a loan for 5 years and less than 5 years, most of the banks are offering you at a 9% interest rate, right? Actually I have put this 9 here, 9.5%, maybe 9.5. Okay, I'll put 9.5, 9%, right? 9%, because 9% is the current interest rate, current bank lending rate. So accordingly, once you put this information, you should be able to compute installment value, right? Actually, for installment value calculation, there is a formula. There's a formula, financial formula, that is discussed in financial management. I don't know actually. I really wanted to meet you online to have an understanding about your background, right? So then I can develop a very good communication between you and me. But I don't have any idea about your background, so accordingly it is a little bit difficult to arrange the level we are going to discuss, right? Okay. So I'll accordingly assume that you have studied some basic concept about financial management. In financial management, we use I don't know whether you have studied present value of an annuity concept. Using that particular present value of an annuity concept, we can compute installment value. So don't worry, right? Don't worry, even if you have not studied, or even if you have studied but you can't remember, don't worry, right? For your exam cases, I will give you the formula so that you can apply the formula to generate or develop this kind of model. Actually, installment value is computed like this, right? I'll show you, right? Present value interest factor annuity formula, it is something like this. So we can say 1 minus 1 divided by 1 plus r. 1 plus r we are not going to type, right? We should not type hardcore, I mean the figures inside the formulas. Figures should be taken, input figures should be reference to input area. So we need to 1 plus r should be reference, we need to give the reference to input area in the cell reference, right? And what I have done so far is write in the formula 1 minus 1 over 1 plus r I have given the reference, to the power to the power the loan period is here. If you want, you can make it fixed to the power, then close the bracket. Okay, this whole should be divided by again r. You can make again close whole everything, close the bracket. This gives you annuity factor. This is what called annuity factor. You should divide your loan by this annuity factor, this formula result. You should divide the loan by this formula result. So I will say this loan divided by this particular formula and enter. You can see same answer I got here, right? So this is the annual loan installment value. This is the annual loan installment value. It means if you get 6 million loan from a government bank, actually government banks are now offering loans at 9% rate. So if you today go to a bank and negotiate a loan of 6 million for 10-year period at a rate of 9%, your annual installment value definitely will be 934,921 rupees. Here I have computed annual loan installment. Actually, no banks are offering to regular customers to pay their loan on annual basis, right? Sometimes government to government or G to G types of loans may be paid on annual basis. Let's say Sri Lankan government obtain a bank loan from IMF or JICA, right? Or China Construction Bank. Then those kind of arrangement, sometimes government will be allowed to pay their loans on annual basis, right? But for a banks, if you are as a regular customer, I mean the ordinary person, if you are going to get a bank loan from a commercial bank, usually they will ask you to settle the loan not by way of an annual installment, right? By monthly installment. If you are going to if you want to compute monthly installment, like each R that we applied here, each R should be divided by 12 months or 12. R should be divided by 12, right? If you want, I can with like this, divide this by 12. You can see here in the address bar, I am dividing this R, right? R should be divided by 12, and here also R is there, B19, R represented by B19 cell. Divide this by 12, and N is there, and N should be multiplied by 12. Don't worry about this, right? I'll teach all later. I'm just showing you what is meant by accounting modeling, right? So multiply this by 12. We'll apply and see. I think there may be some error, right? So don't worry about. So I'm not going to compute now. I'm not going to compute monthly basis installment, right? Because there may be some error, right? I have made some errors. I'm not going to rectify or find it. Just we'll move with annual installment, right? Annual installment. So later we'll discuss monthly installment basis scenario later. The reason for not preparing monthly installment basis is it is very lengthy process. I mean, if you are going to take a monthly installment loan for 10 years, there will be 120 payments, right? That's the main reason, right? So but anyway, right, we will later, I will tell you how to compute monthly basis installment. Though computing monthly basis installment is not a part of accounting modeling, right? It's up to you to study in financial management, right? And I'm not supposed to talk about how to compute monthly basis installment, right? Anyway, like as a support, I will like teach you how to compute monthly basis installment calculation later. Okay, right. So here assume annual basis calculation for 10 years, accordingly only 10 installment. If we considered monthly basis 12 times 10 years, there will be 120 payments. Then you can see it in this particular screen, right? Okay, you can see this particular loan, right? Installment is computed like this. I'll erase this, right, because I have developed it here. So this is the input area. Only three inputs in our model. This is our input area, right? And this is our output area. This is our accounting model, right? Accounting model has three components. Input area, I'll put input area, I'll highlight it in yellow color, right? This is our input, right? And this is our output area, right? This is also part of my output, right? Because installment automatically compute, right? I'll take it here. Installment automatically compute. So I'll take it to okay. So now let's say there's a customer, right? New customer comes to the, I have developed this model. Now let's say how this can be manipulated. Manipulate means that's the main advantage of developing accounting model, right? What is the main advantage? We can manipulate our input area so that we can get different result very quickly, very flexibly, and very conveniently. So let's say I develop this model and give it to if I am working for a bank, I develop this model and save this particular Excel model in the Excel sheet and give it to my bank frontline officer. And whenever new customers comes to negotiate loan, we can ask, okay, how much of loan you require. Let's say that customer says he or she needs to get, let's say, 1 million loan. And then we ask, right, how many repayment period. Let's say he's willing to go for 5 years. So just put 5 years. Right, you can see here, whenever you alter this input area, automatically your model compute the required information very conveniently. Okay, you can see if you obtain 1 million today at 9% interest, right, this column compute interest for the year. This column shows the installment payment, assuming you are paying annual installment, right? Loan is paid annual basis, right? At the end of each year you are paying this much of loan installment. 1 million at a 9% interest rate, annual interest is 90,000. You are paying 57,092 rupees as the installment. Out of this 57,092 installment payment, bank charged 90,000 as interest. Only the difference, that is 167,092, is the amount you are paying your loan. Your loan will be reduced or deducted only by 167,092 rupees, even if you are paying about 257,000. because out of 257,092, 90,000 is charged by the bank as interest. So you are really paying your loan is how much? You are really paying back your loan is by 167,092 rupees. Accordingly, end of the year, your loan balance is reduced from 1 million to 832,908 rupees. So that is the loan balance for the next year beginning. So next year beginning के balance 832,908. After 1 year later, you are going to pay the loan installment. By the time for the 1 year, bank charge interest at 9%. So this loan is subject to 9% interest. For the second year loan interest is this much. And second year also you are paying installment, same installment. Usually loan එක අපි ගෙවන්නේ පුතාලා same installment right, fixed installment is paid right during the agreed period. So installment is fixed. So when you are going to pay fixed installment, interest is going to be right reduced because you are paying the loan. So principal amount is reduced, so interest is reduced, and what you are paying for the loan, what you are contributing to repay the loan is going to be increased. You can see this column interest is going to be continuously reduced. This column loan repayment is continuously increased accordingly. Right, ultimately end of the year 5 you can see closing loan balance becomes 0. Actually this implies our installment calculation, our all the sum and the model is correct, right? If you have correctly prepared the model, end of the loan repayment period, this balance or the loan closing balance should be exactly 0. You can see it is 0, right? So this is right, don't you think this is very convenient model? I mean convenient or supportive tool for the management. You can see this is not an ERP system at all, and this is not a sophisticated accounting information system. This is not an accounting information system. Accounting information system means it's right, it gathers transactions and events and you record, classify, ultimately prepare financial statement. That is a big accounting information system. For that purpose you need to have right expensive accounting package. ERP is very expensive. Usually even middle small scale or middle scale company can't afford for ERP system like SAP, right? Millions of funds should be invested. But as far as accounting systems are concerned, let's say Sage, DAC, MyoB, QuickBooks, this kind of accounting system not that expensive. Average company can afford. Still it is expensive. But as far as these accounting models are concerned, we are not going to spend lot of on accounting model, because this accounting modeling are created, are developed with Microsoft Excel. It is freely available, right? You need to purchase the the license version, right? It is very cost effective. Almost all the computer package, right, they have Excel package, Excel software. So with this Excel software we can develop this model so that you can generate required information very conveniently, right? So accordingly we can now simply manipulate means we can check by changing for different scenarios what will happen, right? Let's say a customer came and asked for 1 million, and he says he want to get a loan of 1 million at a 9% for 5 years. Now am I right, what is the things that the customer of a bank cannot control? Now interest rate cannot control because interest rate is fixed by the bank. Now customer cannot control interest rate. Only what he can control is the loan he borrows and repayment period, right? So accordingly sometime actually keep in mind, right, as finance lecturer I would like to advise you, even interest rate can be changed, right? You can negotiate. Don't just go to the bank and ask for a loan and get the loan, right? Negotiate. right? Go and directly meet the manager of the bank and say, I am so and so, I have already discussed I want to borrow a loan, I have already discussed approach to these ABC banks and they are willing to offer me, let's say they are willing to offer you at 9 let's say 10% or 9%. You can tell them, right, the so-called bank is ready to give me 8.9%, 8.8%, 8.75%, right? Usually bank managers has the power to offer you a particular concession rate, not a big percentage, right? At least 0.25, 0.5%. Bank management, bank manager has the freedom to offer depending on the customer's reliability and relationship, right? So accordingly, I advise you to, right, negotiate. Even the bank interest rate can be negotiated with your bank branch manager. Okay, so let's say accordingly, let's say at particular customer wants to get 1 million and he's willing to originally to repay this at 5 years. Then once the installment is computed, installment value, annual installment is 257,000. Now let's say this particular customer then says, no, 257,000 is too much for me, I can only afford less than 200,000. Then what you would do, not as the manager, what you would suggest to your client? Then you would say, right, go for 6 years, we'll see, you pay for 6 years, then we alter quickly. අපි යාන්ත් එක negotiate කරන ගමන්ම මම system එක ගහලා 6කට ගියොත් මොකද වෙන්නේ? You can see 6කට ගියොත් ළමයි 222,000. ඒත් මදි. So we'll say එහෙමනම් right, mister, you have to go for at least 7 years, right? Yes, 7 years. Go for 7 years. If you go for 7 years, 1 million loan for 7 years at 9% interest rate, you can see your installment, you can manage, you can go for affordable installment 198,000. You can see your model has computed. End of year 7, loan balance becomes 0, right? You can see balance becomes 0, right? So this is very interesting thing, right? So this is what we are going to do with accounting modeling, right? So accordingly, I think this is our first session, and I want to quickly upload another session, especially targeting you, because I'm not going to discuss the ordinary stuff that I usually teach in this particular subject, because I don't have any idea about your background. So that I wanted to make it more attractive and more simplest way. Anyway, if you have any question on what I have discussed so far, please give me a feedback. I will let you know my email address, right? You can give me any feedback if you have any areas to be further clarified, right? Keep in mind, this accounting modeling is an interesting subject. It's very interesting subject and very practical subject, right? I know you all are guys are very familiar with accounting machine, I mean the computing smartphones, and you can't do this with the smartphone at all, right? You must have a machine, right? Laptop or desktop machine, right? Otherwise it is not convenient. So don't try to do it do the online exam with this smartphone. You can't do, right? So you need to have Excel as installed in a machine, right? Okay, desktop, either laptop or even at least a notebook, right? Okay, so keep in mind, it's not going to be a difficult subject, right? I'm sure you all can enjoy this subject, right? This is just an introduction. I will tell you again from the beginning how, right, what are the steps of developing accounting model. Identify the information requirement, my planning part, then the designing part, and the developing formulas. Everything I will explain, so that you will be able to develop more creative models, accounting models, to satisfy the information needs of the users, right? So accordingly, thank you very much. Hope I will quickly upload another video from the starting point of developing accounting model. Right, what are the steps of developing accounting models is going to be your next video. Thereafter, I'll be teaching you, I'll be uh, showing you some techniques and some tools and techniques available in Excel, right? I'm sure sometimes some of you may be already familiar with Excel shortcuts, Excel tools. If you are familiar with Excel shortcuts and Excel tools, right, then you can make use of those tools to make your model more attractive and efficient for your decision making. For example, here you can see, for example, right here, instead of putting altering this particular 10, you know how you can alter this particular 10. You just want to click on this, and then you need to delete this, and you need to, let's say if you want to make it 8, you need to type 8, you need to enter 8. So it is, you might think is it is also not that difficult. Just put in 8 is not that difficult. But what I have done here I have added, I have used scroll bar button to alter this figure. So according, no need to type, just to click on this scroll bar button, right? So whenever you click, right, it alter, right? Very convenient, right? So likewise, there are lot of tools, supportive tools, right? So we need to be familiar with these supportive tools and some shortcuts. If you are very familiar with Excel shortcuts, definitely, right, you can get the advantage, right, because you can save your time and you can make it more creative, right? So be familiar with Excel in general, and but we are not going to write just compute mathematical computation. We are going to compute, or we are going to develop models in the context of accounting and finance. If you are very familiar with accounting and finance plus Excel, that means you are already, right, more or less a accounting model developer, right? Don't worry, right? But I assume you have average knowledge about accounting and finance, and average knowledge about uh, Microsoft spreadsheet. That's an assumption or presumption. I think that is good from your point of view. If I assume you are third year final students having studied financial accounting, management accounting, financial management, you must know all these things. My duty is to just to teach accounting modeling. I don't have that assumption, because ultimately you end of the day, you need to get something from this particular subject, right? Otherwise it's not, there's no meaning. Secondly, I make a reasonable assumption that you have fair knowledge. I mean that you have average knowledge about accounting and finance, and average knowledge or no knowledge about the Excel, let's say. So accordingly, it means I'm not going to underestimate you. Because I don't have any feedback from you. Accordingly, that is very convenient for me to develop our course material or lesson material, right? So accordingly, thank you very much for watching. Hope you enjoyed this session. My next video, I am going to explain how to develop accounting model, right? Designing part, development part, and how to identify errors and rectify them, right? Thereafter we'll discuss, in the third video we'll discuss some key techniques, tools and techniques available in Excel that support us to develop very efficient, effective, flexible accounting model. Okay, thank you very much, right? Bye bye.